Is it recording? Okay, it's recording. All right, welcome everyone. Day number 2 for the virtual class here today. So day number 1, we covered a lot of things. We covered a lot of basics in day 1. Basics were like, what sessions are there, what currency pairs you should be looking at, different time frames, time zones, what time frame are you going to choose based on the way you trade? We went over how the 4-hour candles have like different sessions, how the 1-hour candles create the overall 4-hour candles. We looked at candlesticks. We looked at the basics. We basically looked at the very basic anatomy of a candle, right? Like when you have candles which have no wicks on top, which have wicks on the top, probabilities of where they can move and stuff like that. So today we're going to start off with the thing that really helped me a lot in the beginning. And that was basically wick fills, right? Wick fills. We started off with the daily wick fills, and then we did some 4-hour wick fills. So let's jump into that without wasting any time. I like to keep things very simple, very clear. So, okay, perfect. First time's a charm. No breakdowns over here. Hey, David, welcome. David Hollis. Were you here yesterday? No. Oh, okay. We're here today then. Awesome. We're Gucci. Perfect. So we're going to start off with basically wick fills. Let's do right over here. Wick fills. So the most important thing to know about a wick fill is that when do wick fills basically happen? Wick fills are only going to happen when there's going to be momentum in the market and when there's going to be volume in market. Now, how do we know there's going to be volume in the market? Right? How do we know? There are certain times when there's going to be volume in the market, and there's certain times when there's going to be no volume in the market. So if we go right over here, our first session that we did yesterday, we know that these are the times, right over here when there's volume in the market. All these times here, there's a lot of volume in the market. Sometimes, we have Asian Open. If there's no volume Asian Open, then we know that the next one is going to be your pre-London. If pre-London, there's going to be no volume in the market, then the next one you have the London session, pre-New York, New York Open, and so on and so forth. So wick fills will only happen when there's volume in the market. So now we got to identify what basically visually is a wick fill. Let's say, for example, you have a daily candle and the daily candle is pushing bearish, right? Let's say, for example, also we have it pushing down from the resistance, right? So from the resistance, if we have a bearish candle, and let's say this was a bullish candle that pushed all the way up, and then we have a bearish candle forming now at this time. Now, I think a daily time frame is a little bit of a broader example. So let's bring it down to the 4-hour. Let's say this is the 4-hour time frame. And now if we're looking at the 4-hour time frame and price has formed a resistance, by the way, before we go into this, let me touch base on what basically is resistance and what basically is a support, right? So let's talk about support here first. A support, I'm only going to look at a support on the 30-minute time frame, 1-hour time frame, 4-hour time frame, daily time frame. That's it. And there's a very simplified explanation of a support. A support is the formation of a bullish candle after bearish candle. That's basically is a support for me. When I'm looking at price action, when I'm looking at, the 30-minute time frame or the 1-hour time frame, and let's say price pushes down like this, and if we have, let's say this is a bearish candle, if we have a bullish candle formed, this to me is a support. That's it. And I'm only looking at supports in an uptrend. There's no other reason why I'm looking at a support. Sometimes, price is going to be consolidating and you will see that a bearish candle is going to form and then you're going to see a bullish candle form and you're going to say, oh, we have a support form. Let me take a buy. No, you can't. To keep it really simple, a support is going to be the formation of a bullish candle after formation of a bearish candle only in an uptrend. That's it. There's no other support that you're looking at. Whenever you see, like, sometimes guys can say, okay, you know what, let's say we have a range, right? We have a range and price moving up and down. And what if we formed support right over here? S for support. What if we form support over here? Why can't we take a buy? So tell me, why can't you take a buy over? Let me rephrase that. What's going to be the condition for you to take a buy if price forms support in a range? What's going to be the condition that you're going to go for a buy if price forms a support in a range? It's coming from an uptrend, okay. Volume time, okay. If we have enough range to trade, Caltrain, Mohadri, you get a golden star here today, buddy. So if we have enough range, let's say if this is a 30 pip range and you have a, let's say, okay, so let's say you have a 30 pip range and price moved up, moved down. We had a bearish candle moving, and then you had a bullish candle form. If you have a 30 pip range, like 25, 30 pips plus, if you have a 25, 30 pips plus range, then you can say that, okay, since we're bouncing off of a support and since we're at the bottom of a range and there's volume in the market, there's a higher probability that the next candle can continue pushing up. Also notice in this whole day today, day two, I'm going to keep on focusing on if there's a higher probability, right? Only if there's a high, well, no, not if, that there is a higher probability. If there's volume, then there's a higher probability that that support is going to be respected. And that support is formed on which time frame? You got your 30-minute and you got your 1 hour time frame. 4 hour also works, but it takes a long time for the 4 hour to form a support, which is why I only focus on the 30-minute and the 1 hour. In the same instance, so this is your support. In the same instance, let's say you have a resistance. A resistance is the opposite, basically. A resistance is the formation of a bearish candle after a bullish candle. This is your resistance. A formation of a bearish candle after you have a bullish candle. Let's say, for example, we are moving in a downtrend, price comes up, and we have, let's say, a bullish candle form like this. Oh, too close to text. You have a bullish candle, and then you have a bearish candle forming. This is the perfect idea of a resistance form. Again, only on a 30-minute time frame and 1 hour time frame. That's all what I'm looking at. And this is only happening in a downtrend, right? Because look at it this way. Whenever you have an uptrend, this means price is in momentum. And whenever you know that the uptrend should continue, you know that the uptrend should only continue if there's volume in the market, which means if you have pre-London, London Open, pre-New York, New York Open, and then you're waiting for a candle to close in your direction, right? So it's very important for a candle to close in your direction. Very, very important. I know some of you guys don't like making notes, but making notes, it's absolutely important. Like some guys blew their accounts yesterday. Some guys lost more than 50% yesterday on NFP right after the first day. Right after the first day, we traded NFP. They blow their account, they lose 50%. And I'm like, man, god damn. Like, what you guys learn from this? We didn't even touch on risk yet. Risk is next week. But, that's the thing. So whenever you have a resistance, whenever you're looking at a resistance to form, you're waiting for a candle to close bearish in a downtrend. That's when you have a resistance formed. And the same idea goes in this area is, let's say if we are in a range and this is a 20 pip range, right? You got a 20 pip range, price comes down, goes up, we have a bullish candle form, and then you are greeted with a bearish candle forming in this 20 pip range. This is a great idea to take a sell, right? Great idea to take a sell. I see some guys nodding their heads. No, this is a 20 pip range. You can't take a sell in a 20 pip range. The range has to be at least, I'd say, like 30 pips. 30 pips plus range. How will we know about the trend is upward or downward? Yeah, we're going to go over that. Trust me. We're going to trust me. We will go over that. Can you repeat once? Repeat once? Like repeat once what? Repeat once what? Anyway, let me continue. Right? So whenever you're looking at resistance, resistance is going to be formed when you have a bearish candle forming after a bullish candle that forms. That's when you have a resistance forming. So now what we're going to do is we're going to go into, identifying wick fills, right? Wick fills. Then we're going to slowly move into identifying uptrends and downtrends. 3 things. So if you keep your questions to yourself for about 10 minutes, your question is going to be answered 100%. Trust me. I'm not lying to you. Go over here, go over here. All right. So we're good now. We're good for like support, resistance. We're good. This was the end of section 1. Support, resistance. We're good with that. Support, resistance is very simple. When a candle closes bearish after a bullish candle, here, this is resistance form. When a candle closes bullish after a bearish candle, that's your support. That's it. Now I know there may be a question, oh, what if the candle closes, like a small candle or a big candle and this and that. So we're going to go over that as well later on, right? First, we're just going to get the basics down for now. We're going to get the basics down, and then slowly we're going to move into more complicated stuff like, candle sizes and big bodies and big wicks and like, all that fun stuff, which isn't fun when you're looking at the live charts, but we're going to try to see if we can make it a whole lot better. All right. Wick fill. Before we go into wick fills, let me show you something. I got this thing, that whiteboard. I got that whiteboard, but then I realized that no, it's much better to do it the way we're doing now. That whiteboard would have been a pain in the ass. You love whiteboards. I love whiteboards. I have 4 of them. I just got the Zoom link. Can you please summarize support, resistance I can follow? What do you guys think? We have 95 people over here. What do you guys think? Should we? No. Okay. Yeah, I don't think. But this is going to be recorded. So trust me, it's going to be recorded. You can go over the recording. Shouldn't have gotten right in screen hand. Yeah, watch the recording. Okay, perfect. The community has spoken. Community has spoken. Let's move on towards wick fills, right? Look, man, it's 3:24. It's 3:24. There's a reason it's going to be recorded. Let's move into wick fills. Now, wick fills only happen when there's volume in the market, right? And also when there's momentum. That's when wick fills happen. So now let's break it down. Let's say you have a daily candle, or no, let's say you have the 4-hour candle that goes down, right? You have a 4-hour candle that goes down. Now you know that if we have a 4-hour candle, and this 4-hour candle is happening at, let's say, right after Asian session consolidation, or let's say the 4-hour candle is happening right after the London session 4-hour candle, and now we're moving into the New York session. So, and if also we're coming from a resistance or whatever, then we could say that, okay, visually, there's a very high probability that the next 4-hour candle can wick up, continue pushing down to fill this wick. Does that make sense? Visually, visually. That's what we've seen in the past here as well, that the candles can come down and fill these wicks. And whenever you're looking at a 4-hour candle, this wick could be like, 15 to 25 pips, depending on the pair that you're looking at. So the pairs that I'm going to be talking about here are going to be GBP, JPY, and gold. This is all we're going to talk about, right? So, and also, some other pairs that have a lot of volume, they move a lot too. So this is what happens, like the 4-hour candle, there's a high probability it comes down, it fills the wick, and that's what you have a wick fill. Right now, it's very important that you understand what's the main way to kind of like, break down a wick fill into market structure, because you have to understand market structure. You have to know what market structure is so that you can basically execute a trade. Because if you're executing let's say if you're executing a trade based off of the 4-hour time frame, and let's say that you execute a sell right over here, right? And if you're looking at a 4-hour, your stop loss is going to be all the way up right here, which is going to be a pretty big stop loss. So you have to make sure your stop loss is small. And also you have to make sure that you're looking at the correct time frames to identify where price may go. So now let's break down this 4-hour into, 30-minute candles. Now, I'm not going to draw 8 30-minute candles. I'm just going to kind of like, just for the sake of example, we're just going to go with like, simple 30. Actually, you know what? Screw it. This is the daily time frame. So we got 6 4-hour candles in here now. 6 4-hour candles. Now, let's draw these candles now. Let's say you got the first 4-hour candle that goes up, and then you have the second 4-hour candle. We're moving down. We have the third one, 3, and then you have 4 like this, and then you have 1, 2, 3, 4, and then you have 5, and then after 5 you have maybe a bullish candle that closes like this. Make sense? So we got, actually, let's make it a little bit bigger, like this, right? So what do you got? We got 1, 2, 3, 4, 5, 6, 6 4-hour candles. Now, if you look at these 6 4-hour candles, and if you look at the daily candle, can't we agree on the fact that maybe this is the high on the daily candle, which also means this is the high on the 4-hour candle, right? Follow along with me. When the daily candle formed, this daily candle, it moved all the way down and then continued to make a lower wick. And before the daily candle was closing, it wicked all the way up and closed right at this level. So if we look on the 4-hour, it's the same idea. The 4-hour candle started right up over here, right? We were bullish. So we created a top wick on the daily. And then the next 4-hour candle was bearish. The one after that was bearish. Then we had more bearish candle. And then we had the 4-hour candle that went all the way down and then continued pushing up and closed right at this level. So that close is the close on the daily candle, right? That's the close on a daily candle. Now, if we're kind of like, anticipating, or I would say like, guesstimating how far the next daily candle is going to retrace, because this is the biggest question. If you're taking a sell at this point, your biggest question is, okay, I'm going to take a sell over here. I don't want to have my stop loss all the way above the previous daily candle because I don't know how far the new candle is going to retrace or how big the new candle's liquidity is going to be, right? We don't know that. So how do we find out how far the next candle is going to retrace or how far the next candle is going to grab liquidity? It's very simple. You're looking at market structure, okay? What's this LT? Yeah, I don't know what this LT means, right? So there was a question about how do we know that we are in an uptrend and how we know that we are in a downtrend. We don't know that, right? Believe it or not. We don't know whether we are in an uptrend. We don't know whether we are in a downtrend. We only know that what's the probability that price is going to move up or it's going to move down. That's it. We just know that, right? So if we're looking at this situation right here, this seems like, right? So this seems like we've created a low, We've created a low at this point, and whenever we create a low, there's a very high probability price is going to retest that low. So for price to come up and then continue pushing down to retest this low, that's going to be the wick fill that we're going to have on the daily candle. So now we have to look at this and ask ourselves that, okay, what are we looking for right over here? If we think price is going to retest this low, that means we need to wait for some sort of a resistance to form, which may look like this. Now, when the new candle starts, you can see how the candle had a wick on the top, and this one could be like, okay, we can maybe move up like this. Next candle can also move up like this. Now we have 1, 2 candles, right? Now, if we're looking for sells, if we're looking for price to retest this low on the higher time frame, we need a resistance to form on the lower time frame. Can we take a sell right over here? Absolutely not, because the resistance is not formed, right? Whenever you're looking for sells, write this down as well. Whenever you're looking for sells, the candles, they have to close in your direction. Whenever you're looking for buys, the candles, they still have to close in your direction. If the next candle closes bearish, now you have a resistance form. You got a resistance form, and you're like, okay, we got a resistance form. We made a new low, and now you ask yourself that what's the probability that the next candle can continue pushing down versus what's the probability that the next candle can, magically continue pushing up. And we talk about this in the live streams as well all the time, like, about probabilities. What's the probability we can continue pushing down? What's the probability we can continue pushing up? So we always play on probability. Whatever trades you take, all your trades are taken based on probability, right? It's very hard to push down. Resistance and support on lower time frames versus clean range on high time frames. Yes, that's correct. William, absolutely correct. The bullish candle at the top of the hour is a liquidity wick for the daily. Yes. Yes, Paul, you're absolutely correct. This push up is the liquidity wick on the daily time frame. You're absolutely right. Right? So once we have a candle forming bearish, we got a resistance form. It's very simple. We're like, okay, there's a high probability we can continue to push up. And in a perfect world, in perfect price action scenario, the next candle can continue to push down. But it may not retest the low as we think, because the next candle can continue to push up here as well. We don't know that, because always whenever you're trading, just understand that if we continue pushing down to some sort of a support, it's not all the time the price will like come all the way down to support. It can come midway, it can come halfway, and then continue in the opposite direction. Those things can happen. But if there is really volume, we can continue pushing all the way down. How do we find out how far the new candle is going to retrace? Could you please repeat that answer line? How do we know that the candle is gonna? Hey guys, listen. If you're gonna go on a bathroom break, or if you're gonna go get coffee or water or something like that, and come back and ask to repeat, I'm not gonna repeat that. So just throwing it out there. Okay, so how do we know that how far the next candle is going to retrace? So if this is the candle right here, and if you're taking a sell and you're asking how far the candle is going to retrace, you're looking at the lower time frames to see whether we will create a resistance or not. Because once we create a resistance, that's it. I tell myself that, okay, we've done the retracement, we've done the liquidity grab, so now there's a very high probability we can continue pushing down as long as we respect the previous candle's high, right? So what we talked about here was wick fill, and we talked about the market structure to support the wick fill. Make sense? Right? Market structure to support the wick fill. Okay. Risk, also remember guys, risk management, we will talk about tomorrow. No, not tomorrow, next Friday. Will we retest the low only if we're in a range between the high and the low, and the retest the low we just made? Yes, so we will retest the low once it's a new low form. And also when there's volume in the market. whenever there's volume in the market, there's a very high probability we're going to retest the low. And you know, the way I got into this was basically there was a podcast I listened to. I used to listen to that podcast twice a week. Now I only listen to that podcast once a month. I think half the views on that podcast are from me, but the podcast was basically about, it's a show called Chat with Traders, and it's episode 82. Yeah, Day Trader 71. Yeah, Day Trader 71. So in that podcast, that guy says that whenever price makes a high or whenever price makes a low, there's a very high probability, like 80% chance that that high or the low will always get retested. And when I heard that and start to look at the charts, I'm like, okay, wait a minute. Does this make sense? That if we're making a new low, that means we have to be trending. That means the higher time frame should be continue pushing down. And if we think that the higher time frame should continue pushing down, this means on the lower time frames, we should form some sort of a resistance, right? So this is a note time right here. If higher time frame continues to push down, this means lower time frames should create resistances. This is very, very, very important, right? If you're looking at the higher time frames, and if you think that the higher time frame is pushing down, or if you see episode 82, I'm sorry. If you see a bearish 4-hour candle, if you see a bearish daily candle, then you're like, okay, let me go with the high time frame scenario. If the high time frame says bearish, then all I got to do is to wait for the lower time frames to create a resistance. And from this point, I want to say, and vice versa. This is a very good word, vice versa. I understood what vice versa means when I was 24, and I was like, oh, nice, good word. But anyway, right? So whenever you have a high time frame and it's continuing to push bullish on the lower time frames, you're always looking for supports to form. For example, right? For example, let's say we have a major support formed or whatever, and you have a candle that's closing bullish, and now you're anticipating the next candle to continue up. Actually, let me make it a little bit bigger over here. All right, let's say you have a candle that's pushing bullish and you have a wick at this point. Now, there's a probability that the next candle can fill this wick. We can visualize that the next candle should form maybe a liquidity wick or not, or it cannot form a liquidity wick. But in a perfect price action scenario, it should form a liquidity wick and fill this wick to continue pushing up. And in the same scenario, now let's say you had this daily support or whatever, right? Daily support, DS. And now you see the candle push bullish, and you look at this, you're like, okay, if the daily candle closed bullish, what do I need to see on the smaller time frames? On the small time frames, maybe I want to see a support form. And that's all what you look at. What's this? The lower time frames would create the resistance after pullback on lower time frame. Yeah, that's true. So you only want to see a support form on the lower time frame to substantiate your idea that price should continue pushing up. Let's take a look at this right here. Now, let's say you have a bearish candle formed, right? And this bearish candle, next you have 1, 2, and then you have a bullish candle formed, 1, 2, 3, 4, and slowly, let's say it's dying down, and then you have a bearish candle form like this, right? And this is something what you got right over here. Now, this is the daily candle, and these are your 4-hour candles at this point right here. Now, if you're looking at a buy at this point on the daily candle, and your bias is there. Now, also one more thing. This is a very important note. This note is never change your bias. Never change your bias. If you're looking for a buy, just stick with the buy. Never change your bias. I've seen a lot of people lose this way because they will have a buying bias and they would take a loss on that buying bias, or like they would see a confirmation and they wouldn't execute on that confirmation, and then they would say, oh, okay, you know what, let me take a sell. So let's say if the daily candles are pushing up at this point and you're looking at the 4 hour and we form resistance, they will say, okay, daily candle is bullish, but let me take a sell to ride price down, and then I'm going to take a buy to ride price back up again. That's the most dumbest thing you can think of at this point, because you have to be disciplined. With discipline, you have to wait for price to come to you. When I first started trading, they used to say these things. And these things were that you always have to wait for price to come to you. So now looking back, when I look at it this way, I'm like, okay, what did that mean back then? Back then, I would just say, okay, you know what? Prices from resistance, let's take a sell. Prices from support, let's take a buy. And it wasn't really necessarily waiting for price to come to me, or I wasn't necessarily waiting for price to print what I wanted price to print. So if we're looking at this right here, and if we're looking for a buying area, the best thing is going to be to maybe wait for support to form. Now you have a candle that pushes down like this. You have another candle that pushes down, and then you have sort of like a support form, right? When you have a support form, you have a high form right over here. You have a support form. This support form is the liquidity grab on the higher time frame. It's the pullback. Pullback is prices pulling back to potentially continue pushing up, because at one point this candle was bearish, right? This candle was bearish, and this moved down. This is the formation of the bearish candle. But once you have a bullish candle form after a bearish candle, now you have a support form, right? Now, if you have a support form on, let's say, the 4-hour time frame, 1-hour time frame, 30-minute time frame, there's a very high probability that the next candle can continue pushing up. And that push up is going to be the push up on the higher time frame to fill this wick. And wick fill on the higher time frame is going to be, filling the range here on the lower time frame. You're just waiting for support to form. A support is formed when you have a bullish candle closing after a bearish candle. A resistance is formed when you have a bearish candle closing after a bullish candle. Would you say that this method for non-news days? Yes. If you don't have any news, if you don't have any external factors there to kind of influence price on where it should go, it works for that. 100%. There's a very high probability it's going to work for that. Right? So, but shouldn't we think of both scenarios? Like, how will I take a buy and sell? Most days I think of both. No, just think of one. Think of just one. Think of one to say that, okay, what's the probability that price can continue pushing up versus what's the probability that price can continue pushing down? What would be entry breaking? What would be entry? Where would be entry breaking previous candle high? What do you mean? Entry breaking previous candle high? I don't know what you mean. Entry breaking previous, where to buy? To buy? Oh, to buy. You're taking a buy over here. Okay, yeah, for sure. So if you're taking a buy, your buy is going to go right at this point. That's where your buy is going to go. And we're not going to talk about stop losses now. We're going to talk about stop losses next Friday. That's day 3. Because on day 3, we talk about risk management, dynamic risk, static risk, how to apply risk, how to cut losses, and all that fun stuff. Do we look at 1 hour or 30-minute in this case for resistance that price can possibly reject? Yes, we do look at the 1 hour and 30 minutes. These examples, they work best for 1 hour and 30 minutes as I trade. So they work best for 1 hour and 30 minutes, like clockwork. I absolutely love this. So whenever I have a support form, I know that, okay, like, you know what, now there's a high probability for price to continue to push up. Or if I have a resistance form, then I know there's a high probability for price to push down. But also it depends on how the candles are closing as well. Let's say, for example, we have, let's talk about candle sizes. Candle sizes matter a lot. Like, what's this? So just to summarize, you look for a candle close in your direction on the 4-hour time frame, then go on the 1 hour. Yes, that's true. Are you drawing the support resistance on the body closing or the wicks? We will go over that. We'll go over that in the simulation session. Yeah, there's going to be a 1 hour simulation session happening later on. So we're going to go over that. Okay. How's my pace? My pace is good. Not too fast, not too slow. Great, perfect, good, 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 awesome. Okay, let's take a look at candle sizes right over here. Whenever you have a big candle forming, right? Let's say this is a big candle forming. This is a big candle forming. A big candles mean that there's always volume, right? This means there's always volume. Then after a big candle, what you're going to see is that the candle bodies just start to get smaller. So whenever the bodies of the candles just start to get smaller, this means that the volume is decreasing slowly at this point. So whenever you have a smaller body formed after a bigger body, that means the volume is decreasing, and we have to wait for price to kind of like, give us some sort of an indication whether we can continue pushing up or like, what's going to happen now. Big example is, let's say that price moved bearish, right? We moved bearish and we continue to move bearish, and we've created some sort of a low right over here, right? We've created a low at this point. Now we're trying to move back up. We move back up, big candle. And like, after this big candle, the body starts to get smaller. Now, when you have a big body candle, and after this candle, you have another candle, which is a bigger body, which means the volume is increasing. Then you have another candle, which is an even bigger body, which means the volume is increasing. Now, all of a sudden, you're faced with a candle that has a smaller body. This is a telltale sign that maybe volume going up is decreasing now slowly. So whenever you have volume decreasing slowly as price is moving, you know that, okay, maybe now there's a probability for price to move in the opposite direction. You can't take a sell at this point because the candle has not closed in our favor. So you have to wait, right? You have to wait for candle to close bearish. Let's say we close bearish right here. Now you have a very good opportunity for price to continue pushing down. Now, I know someone's going to be thinking, oh, but Raja, you know what? If this candle is breaking the low of the previous candle, can't we take an impulse entry? No. We're going to talk about impulse entries later. Right? So size of the bodies, they matter a lot. And in impulse entries, we're also going to talk about what if the candle closes at support and let's say, okay, so we have this price coming down, and let's say that the candle closes a small body candle as support. Can we take a buy if price is in an uptrend? So when price is in an uptrend, it's going to start from the bottom, come down, go up, come down, form support to potentially continue pushing up, right? When a candle closes with a smaller body, there's basically not enough volume for price to continue pushing up. So we're going to talk about this in the impulse entries session as well. It's amazing to see you explain mistakes we committed in the last week. The mistakes you committed in the last. No, I think there are a lot of people who commit the same mistakes here again. I think a lot of people, they function the same way. We as a student, oh yeah, yeah. Like there are people who commit the same mistakes because like I think majority of us we think the same way, we act the same way, we execute the same way. We all have the same insecurities, we all have the same like the ideas of losses we have, so it's kind of like the same overall. What time frame do we look at for trends? We already talked about that. The daily or 4 hour, and like you look at the 4 hour time frame and you decide whether the 4 hour candle is going to go bearish or bullish. And then if it goes bearish, then you're looking at the market structure on the 1 hour time frame, or you're looking at market structure on a 30-minute time frame, and so on and so forth. What would you do if daily closed bullish, leaving a wick, but it's at heavy resistance? What would your bias be if this happened on GJ this week? It filled the wick and went bearish. Oh, okay. So if the daily candle, let's say right over here, daily candle closed bullish, leaving a wick, but it's heavy at resistance since you didn't mention wick on what side, right over here. Yeah, that's fine. We're at heavy resistance, then you're basically just waiting for a resistance to form on the small time frames. But let me tell you guys, let me stop you guys right over here. I'm not going to entertain any what if question, right? Because once we go into this what if rabbit hole, this is a very massive and deep rabbit hole that we can go into, because what if is like infinite scenarios. We can talk about infinite scenarios, so it's very, very tough. So we're just going to be talking about generalized scenarios, and then we're going to move into our, like, then we're going to move into our simulation sessions later on. Right. So the main thing I want to be clear here is about wick fills. We're good with wick fills. High time frame wick fill is lower time frame market structure. What was the course called that you paid 20K to learn about the no trade zone? What? Bro, there was no course like that. 20K to learn about the no trade zone? No. Maybe you're talking about the like the mastermind group I'm in, but that's not 20K, that's 35K a year. You said on a live stream, yeah, I don't know. I remember. But even if I did, I think I was joking or lying, but there was no course I took for 20K to learn about no trade zone. Like a no trade zone is basically simple. No trade zone is this. Like you have a zone which is 20 some odd pips, and price just ranges between the zone. This is basically a no trade zone. But definitely I was joking. Like there's no way I'm spending 20K for someone to teach me what a no trade zone is. It's not happening. Right. Let's talk about exhaustion candles. Yeah, let's talk about exhaustion candles right here now. Okay. What do you guys think are exhaustion candles? What's the first thing that comes to your mind when, someone says or someone talks about exhaustion candles? Large wicks, trend, bigger than the body, long wick, small body, losing momentum, and small bodies. That's absolutely correct. So let's small body than previous candles. Yes, perfect. Right. So now exhaustion candles, they happen two ways, right? The first way the exhaustion candles happen is when you have or when you're trading with the trend and you're waiting for a counter move to take the trade with the trend, right? So let me show you what I mean by that. Let's say you have a candle that's pushing down and we are in an uptrend. So if we are in an uptrend, so let me break this down like this. So uptrend means sell resistance. Downtrend means buy support, right? Very simple. So let's say we have an uptrend and price is moving bearish at this point and price is moving bearish here once more. And then you have another bearish candle with a big wick to the downside, right? So when you have a big wick to the downside, this is an exhaustion candle. And the best way to kind of like identify an exhaustion candle is when, so let's see this over here. Exhaustion candle, when the wick is bigger than the body. That is an exhaustion candle. Now, don't put this against me if sometimes you see a candle with a big wick and you're like, oh, Raja said it's an exhaustion candle, so I'm not going to trade this and it moves your way. There's a very high probability that if a candle closes with a big wick, then it's an exhaustion candle. Is by uptrend is by resistance? No, uptrend is by support. Uptrend is by support. Yeah, I think I said it the wrong way. Uptrend is, oh yes, right here. Thank you. Uptrend is buy support, downtrend is sell resistance. Perfect. When does a wick exhaustion turn into wick fill? Does it have to wick up first? We're getting to that, William. We're getting to that. So let's say we had an uptrend and we are forming this candle right here. And now you can see that the candle bodies, they start to get smaller, smaller, now small body and a pretty big wick. So this is a best identification that maybe now we may have some sort of a retracement happening. And normally after this, you're going to see a bullish candle form and the bullish candle will continue to push up, right? So this exhaustion candle happens just before a retracement. When price is moving up, this is retracement indication right here. This means that the retracement, there's very high probability that retracement is incoming. Okay, but it also does not mean you should take a buy. It doesn't mean at all that you should take a buy. It just means that there's a very high possibility that a retracement is about to happen. Right now, this is in retracement. Now let's talk about an exhaustion wick when you're looking at it for price to move in your favor. Okay. Now, if we are in a downtrend and you're looking for a resistance to form, you're waiting for a candle to close bearish, so price can move in your favor. So let's take a look at this, right? Let's redraw this here again. Actually, let me try this. All right, perfect. Love the iPad, man. Okay, perfect. So let's say you have a resistance forming and you have a candle that, where's my marker right here? And let's say you have a candle that forms a big wick and it closes bullish. Actually, let's make it a little bit better over here. That it closes bullish and there's a big wick. Is this an indication to sell? This is not an indication to sell. This is not an indication to sell because the candle has not closed in our favor. That's why it's not an indication to sell. You can't sell this way. What you got to do is you have to wait for price to close bearish, create resistance, and now you have a high probability for candle to continue pushing down to retest the low we created earlier. That's it. And this new bearish candle form, it can have a big wick, it can wick up, close bearish, even if it's rejecting previous resistance. Yes, even if it's rejecting previous resistance, it's still not a good indication to sell. Right? So you got to wait for a candle to close bearish and then execute the sell to see how price is going to move, how price is going to continue to move. Exhaustion right there. Okay. Do you have any questions so far? Downtrend, uptrend, exhaustion candle, and in the exhaustion candle, you're just measuring the wick. If the wick of the body, if the wick is bigger than the body, like lengthwise or pip wise, because that's the measurement we use in the charts for stuff like that. If the wick is bigger than the body, then there's a very high possibility there's going to be a rejection or an exhaustion candle. And you're not trading after the exhaustion candle. You're waiting for the next candle to close. There are ways to trade right after the exhaustion candle, but that's going to come later on. So I just want to know if we are clear on this. Very simple stuff. Good? Cool. Cool. All right. I have a question. Okay, yes, William. Ask away. All right. I think it would have been better. Okay, there we go. Have you ever considered to be a swing trader, and how would you add positions if you're a swing trader after your first position runs 1 to 1? I have never. Well, I did think about a swing trader, but that was probably not the bright idea because what I was doing was that if I was, let's say if I was taking a sell and my stop loss was right over here, and when price would move up, I would remove my stop loss, and then I would tell myself, "Oh, I'm just going to swing it." So that did not turn out well. Then I want to say, "Oh yeah, my stop is gone, and now it's a swing trade based on a daily time frame." And especially if I took the trade on the 15-minute time frame, it didn't play out the way I thought it would play out. Does it make a difference if the bearish candle wick is smaller than the bullish candle? No, it makes no difference. Is as in below the bullish candle rather than no, it makes no difference at all. No difference whatsoever. Okay. Um, so what we're gonna do is let's take like a 15-minute break. I have to get some sort of coffee and whatever. Let's take a 15-minute break. In the meanwhile, I'm gonna let this Zoom record and kind of process what we did. And when we come back, we're gonna move into impulse entries uh, from basics to advanced impulse entries, and then we're also gonna go into how to trade counter trend because there are a lot of opportunities which we miss because we don't know how to trade counter trends or we look at the wrong ideas, indications, and stuff like that. So we're going to look at impulse entries, everything about impulse entries, and we're going to look at counter trend trading. Yeah, some of the stuff is basic, but I think it's very important to kind of detach yourself from the complication of trading and really step back into the basics because like a lot of time when we're looking at the markets, we forget the very, very basics. The very basics of how the candles are formed, how the structure is formed, how price moves. We go in a drawdown, we keep holding the trade, or when we go in profits, we think price is going to continue pushing up. We forget about all those things. So I think in this way we can really make things work better. So it's 3:05 here for me. Let's circle back in like 15 minutes and then we're going to continue forward. And also, I'm going to end the meeting so you guys can join back with the same meeting link. So it's still going to be here. All right, awesome.